Okay, welcome to this particular session. I appreciate you being here. I'm not going to be talking about what I talked about before as the moderator of that other session, so I'm not going to bore you. Just to give you a little bit of my background, I'm the president and CEO of Shaffer Asset Management, and basically what I do, or what I've done in the past, and this is where it all comes together, is I used to be a floor trader on the floor of the New York Futures Exchange. That's where I started my experience. I was a commodities trader at Bear Stearns. I was a Wall Street consultant through a major accounting firm. I'm also a certified public accountant. I actually have gotten the degree for that. I used to manage offshore currency, onshore and offshore currency, and hedge funds for banks. I had my own hedge fund that I closed many years ago. And right now what I do is I manage money for individuals, totally discretionary, using my asset allocation models, which includes currency, foreign exchange, mostly using exchange-traded funds because it's a completely liquid type of a fund, but it uses 5 asset classes. And then I trade the markets myself in the futures market and in the spot currency market based on the models that I've built. I have a book out, wrote it several years ago. It's called Profiting in Economic Storms. It's a historic guide to all the different market cycles. It's basically talking about cycles, where we are, where we could be going, and what I look at. I publish a weekly newsletter. It's real cheap. It's $10 a month. I do it once a week. And it gives it gives my clients and subscribers things that I'm looking at, because I don't want people to call me, ask me a lot of questions. So I sent it out once a week, different charts, different angles, different directions of what I see in certain markets where things are going, and that includes foreign exchange, the euro. I'm also a consultant to traders and other prop desks. They pass a lot of algorithms by me. I was one of the original owners of TradeStation back in 1990. The Cruz brothers put that together. I don't know if any of you are familiar with it. I helped build that algorithm and trading platform and easy language and stuff. So I used to build these models myself, so when people come to me, I can understand the if-then statements and what they're trying to accomplish and try to help them and guide them. So I do a lot of that. I'm a guest commentator, like I mentioned this morning, on the Fox Business Network, and that I've been doing since 2008. And when the markets get really crazy, they call me in, and I just got a call. I'll be on between 2 and 2:30 by telephone because they want me to talk about what's going on in the markets today. For those of you who don't know, it's down about 300, 350. I speak at a lot of events. I really enjoy talking to people, groups, clients, people in the industry. I just enjoy it, so I do that. I'm nationally known as a speaker. And I'm also, as I mentioned, a registered investment advisor. Now, this is about, and I'm going to go fast because I want to keep you at 12:30. So basically what I do is I look for these trading concepts, and they can be used on any time frame. I happen to enjoy the daily trading, the activity of what goes on in the markets, in a 5-minute, 15-minute, 60-minute, 240-minute, and a daily. I really enjoy watching for lack of a better word, the manipulation that goes on in the markets, and I try to quantify it. That's what I do. So I look for the support and resistance levels on a 24-hour trading clock. I look to see what can move these markets during the day, because I have all the news releases that come out, any events that are globally, somebody speaking. I want to know when those times and what they're going to be talking about, and what the news releases or the economic numbers that have come out. I very, very much am focused into what the central banks are doing, and I've been giving this particular kind of presentation for many, many years, and the central banks, and we don't know because they won't allow us to audit them, but I absolutely believe that they are 100% in the currency markets, and they are moving the markets daily as to what they're trying to accomplish. They're using currency swaps or outright trades, whatever it is, country to country, all the central banks are talking to each other now. So what I try to do is, how do I decipher and leverage these strategies using algorithmic trading programs? Because you can quantify anything, and there's many ways to do this. What I'm doing is not the holy grail, but there are many ways to skin this cat, and I try to find what works for me and what makes me feel more comfortable. So I'm going to show you that, and what I'm basically trying to do is create indicators to reduce risk exposure and create stop points, entry and exit points based on these models. Now, I don't know in the room, who actually are traders? Raise your hand. Okay, several of you. And I guess the other you are involved in the industry, obviously. So let's go on. Now, when I was a floor trader in 1983 in the futures exchange, I walked into the pit. I was a young lad. I was 21 years old. And this guy said to me, listen, I want you to turn your card around. Back then, we used cards. He says, I want you to write these numbers down. And he gave me 5 numbers. and then with an expected highest high, the expected high, the pivot point, and the expected low, and the expected lowest low. Anybody familiar with that? You are? Okay. This seems to work, if you understand how this works, it seems to work in every market anywhere in the world on a daily basis, and it gives us the map for what traders are doing. These are the calculations for it. It's out there publicly. I didn't make this up, but it's basically a mathematical calculation that has absolutely no basis. There is no logic to it. It's just something that traders, which you're familiar with, traders just use this as the guideline for their buy and sell areas. So here's an example of what it looks like. This happens to be a particular currency, and it shows that on this particular trading day, which starts over here at the bottom and ends here, this is the 24-hour clock, that this market was, for lack of a better word, manipulated, just a lack of a better word, was put up and literally hit the target, literally on this day, came back down, hit the target for this. And now, again, the expected highest high is here. This is the expected high. This is the pivot point. This is the expected low and the expected lowest low for the day. So here, they obviously, the market came up, hit whatever stops they were doing up here, brought it all the way down, came back to the pivot, couldn't get back through there. You find a lot of resistance. What do traders do? They are usually the day traders or the floor traders or whatever traders now, they try to get long to hit the lines, either this line or this line, and when they're above the red, they try to stay long. When they're below the red, they try to stay short. That's really the game that they do on a day-to-day basis. That's their map. So whether you're position trading, day trading, I don't care what you're doing, to enter or exit a trade, these are very important levels to know on any trading desk. And you can go and calculate this yourself the day before and then watch the next day's trading. And it's really interesting as to what happens. And there are other things that happen when they break through, and you can get a feel for it. Here's another currency, same thing, same 24-hour clock. Bang, right through there, came down here, broke through, couldn't get up, they slammed it right down to the expected lowest low of the day. When I was young, I used to say, how do they know where the market goes up and where the market goes down, and why does it stop there? And it's really based on these calculations. So there's just some more examples for you that I'm just putting through. You can see, I mean, it constantly is happening. That is probably about 75% of the time. And I mean, these are just pure examples of 24-hour clocks day trading. Interesting patterns. Now, what I also look for is what could move the markets during certain times of the day. And of course, we all know about the London VIX, but these are times in New York time, Eastern time, that I watch very carefully. The 8:30 numbers that come out, 9:30 the New York Stock Exchange opens, 10 o'clock you get the institutional money. They don't like to trade between 9:30 and 10 on the equity side, so they're going to wait till 10 o'clock. Then they'll push the market. Then you get the 10:30 pivot. What happens at 10:30? All the guys that were wrong the previous day have their margin calls that have to be met around 10:30. So you'll see the market make a high or a low around 10:30. Very common pattern that I see. Then you get the 12 o'clock rotation here in New York when everybody goes to lunch. 1:30, they come back from lunch. 2:30, you get usually a little bit of a trend in the day of which way it could close. Then 3 o'clock, currencies close on the futures exchange at 3 o'clock, bonds close, so you get a lot of rotation there. And that's really when I try to stop. I try not to, if I'm day trading, not to trade after 3 o'clock, because then it just gets to be, a 50-50 probability. So how are the central banks affecting the currency action? Are they in the markets? I mentioned before, they really are. They're intervening at certain price levels because they have certain mandates that they're trying to accomplish for their own book, for their own economics of whatever they believe, whether they're right or wrong. So they'll come in and support the market, they'll resist the market, they'll give strong bids and asks, and really that's what's been going on prior to now. Okay, prior to now, currency markets had very low volatility. Even the equity markets, the spread on the S&P futures is so tight. It's my belief, and again, there's no proof, there's my belief that they're keeping low volatility so people feel comfortable investing in not only equity markets but in other markets because they feel, and this is their belief, that the markets aren't volatile, that the public will come back in. All right, that's just their belief. So now they've kind of lost a little bit of that control, which I was expecting to happen. And then we get sudden rallies and sell-offs. And again, those are big people, big traders coming in and moving the market because they really are position trading. They're not day trading. So they'll just come in, they'll move it. It doesn't mean anything, a half a cent to them. All right, now, how to decipher. I use Fibonacci, 233, 144, and 89 tick bars. If you have any questions about this, I can talk to you about it later, but these are Fibonacci numbers in sequence. I also watch the 200-bar simple moving average. Everybody watches that. All right? Doesn't mean it's right, just that everybody watches it, and they use 200. Then I also watch the levels of interest that I mentioned to you before, and I use technical analysis. Okay? I draw trend lines, patterns, head and shoulders. I use something called T-theory. I don't know if you're familiar with T-theory, but it's a time sequence. So I try to measure up the charts. Here's an example of now taking 5 days, or 1, 2, 3, 4 or so days, of how these pivot points actually happened in a sequence and where the 200-day moving average came into play. So you can see certain areas that could be very powerful here, like the 200-day moving average here, and we have the pivot point of the day. So this was a critical level. Then we had a breakdown through the pivot point and then broke the 200-day moving average, and they tried to attack the lowest low calculation of the day. So it does kind of now, you could take those pivot point numbers that I gave you before, and now you overlay them to moving averages. You can see there is some type of validity or sequence that does seem to occur on a regular basis. It doesn't always happen, of course. If it did, we wouldn't be here today. But to control your risk in your trading or your trading desk or your prop desk or your portfolio, you need to know what I call the big boys are doing so that you can kind of work around them and work with them if you want to. It does take discipline. So again, I'm just showing you the different pivot points, the expected highest highs and lows of the day that were calculated mathematically, and how the 200-day average was pumping in there. And these are some of the Fibonacci lines also. So I'm not going to go into detail of them, but just to give you an idea of what they look like. Okay, so let me just move on. Okay, so I use now we're going to something else. Overlaying on top of this. A lot of people just know about the moving averages, but the real professional traders use the exponential moving averages. Even the floor traders use these on a 5-minute time frame. So I use a 10-bar, a 15-bar, and a 20-bar exponential moving average. And then I use a 40 and a 47-bar simple moving average. And this really opened my eyes when I started to do some research, and this was introduced to me by some other traders who told me what they were using, and I kind of said, oh, that makes sense. This is actually what it looks like on a 5-minute frame. And what we have here in this mumbo jumbo is this is the 200-day moving, 200-bar moving average. This is the 40-47 simple, and these are the exponentials. And you see that it creates like a waterfall effect. So there is some validity that when the exponentials fall above or move above or below the simples, there seems to be a market shift. You see how they stay, and there's a market shift that occurs with this type of time frame. Now, whether you call it an algorithm and computerized trading, you can trade off of that, or you can do discretionary trading on it, it's up to you. But this is what a lot of models are being built on to trade the markets in all different time frames. So you can see how the market's reacting. And again, these are just pure examples of how to stay in a trend if you're a trend follower, or how to reverse if you are not a trend follower and you're trying to pick tops and bottoms. Now, there's 4 types of trades. Am I staying on time? Good. 4 types of trades. There's large profits, small profits. There are small losses and large losses. And this is where the psychology comes in as to be really a good trader. In our minds, when we have large profits and small profits, we fear losing them. That's how our minds are created. And when we have losses, we hope they come back. This is why the public loses a lot of money most of the time. The example would be, and let me give you as a stock example, not a currency example. If a stockbroker calls up a client and says, I love this stock at $50, let's buy it. Client buys the stock. Stock goes down to $40 a share. We've all been there before. What does the broker do? The average broker says to the guy, listen, I loved it at 50, it's even better at 40. So the client does what? Buys more. Then it goes to 30. What does the broker say? Just hang in there. We still like it, it's a good company. Then it goes down to 25, maybe 20, and it starts to hurt, and you get that pain in your stomach, and that's where the average retail guy gets out. So I say, wait a minute. And they hope these losses come back. I say, wait a minute. If you buy a stock at 50 and it goes to 60, what does the average broker tell his client? Listen, we bought it at 50, it went to 60, we made $10 on $50. Let's get out of the stock. We did good. And what happens? The stock goes to 70, goes to 80. Nowadays, they go to 150, right? So what happened here? Well, because we're so used to taking losses. All right, 50% of our trades are profits or losses. It's just how we manage them is really where we make the money in a probability scheme. So you take so many losses with stocks like that and losing that you fear when you have a profitable position that you're going to lose the profits. So what do I say? I say, wait a minute. Reverse that thinking. Fear the losses. Get out of the losses. And if you buy a stock at 50 and it goes to 60, that means you were right. So that's where you should be adding to that position, not selling the position. And that's a hard concept. But probability-wise, it makes a lot of sense. With that in mind, if you do cut out the losing trade that didn't work for you, instead of buying more at 40 of a $50 stock and getting out of it at 40, you took a small loss instead of a large loss. So if you eliminate large losses, based on probability, small losses and small profits will cancel each other out. You're looking for the large outlying trades. That's where the big money is made, is in the trends and in the trades. I mean, George Soros sits on big trades all the time. So that's just a concept that can be used also in foreign exchange. It doesn't matter what the vehicle is. It could be bonds, foreign exchange. It could be equity markets. It could be real estate market. I don't care what market you're looking at. The concept is still the same. We're built to hope our losses come back because we're a hopeful creature and we fear losing something. Okay, so remember, trading is a business. Develop a business plan and follow an entry and exit plan with rigid discipline. And I just give some indicators of how you can help that discipline. Survive to hang around for the big moves. I mean, some of these CTAs were dead in the water for a while. Some of them closed. But now they just missed the whole opportunities that we've had the last 2 months. I mean, there's been tremendous opportunity, and I think there's going to be more. I think the opportunity for trends and real big market movements, maybe more than people want, is now around. I mean, they're raising the margins for the retail on some of the currencies now, so the leverage is not as great, but still the opportunity is there. And when there's, the biggest thing I say is, I don't care where the market's going as long as it's going. When it sits flat, it's hard to make money, and that's just the bottom line. Break-even levels have no bearing on your future success, so the market does not care where you got into your position. It doesn't mean anything to the market. It means something to you only. Big moves take time to develop. Stay patient, and nothing new ever occurs in the markets. I could show you these charts from the 70s, the 80s, the 90s, the 2000s. I could show you from yesterday, which I'm going to do in a second. I'm going to go live. It's the same thing over and over and over again. And once you can understand the map or the picture or the painting, then it's easier to kind of work through the markets, whether you're, again, systematic, computerized, or not. Okay, so that's me. I'm going to flip over to live, and now the part of this discussion that they've asked me to do with you is I'm going to show you right now what's going on with the euro. You're going to see it live. And now it's up to you to decide, speak amongst yourselves, what would you do in this situation with the euro? Okay, this is the euro live. I'm not making this up. You see it moving? This is right now live with the euro currency. This is off my TradeStation platform. Okay, so the lines I just showed you before were from a while back. Here are the lines from today. Here's your 40, 47. Here's your 10, 15, and 20 exponential. And this is your 200. And this is a 5-minute time frame, 5-minute bars. Okay? Whether you're long, short, or flat, based on what you see here, what would you do? And that's for you to figure out and discuss. And come up with an answer of what would you do. Again, whether you're long, currently in your mind, whether you're short, or whether you're flat, What I just showed you, what would you do in this scenario? Any questions you want to ask me? Everybody's staring at this like, do you like what you're seeing? Have you ever seen it before? No? Is it unusual? Do you think I'm coming from left field here with what I'm talking about? I saw you nodding quite a bit. What do you think?
I think I get rid of it short of it.
Okay, good. Where would you short that?
I'd like to see it, go through a little more.
A little more. And you know what I call that? I call that the waterfall. That's my waterfall effect. But that would be, in your opinion, you would put a short in somewhere around here. Now look, it's starting to break down. It's actually, the exponentials are sloping negative. It's having trouble at the 44. Now you see this little area? Again, I'm not making this up. This just happened when I was speaking for the last 15 minutes. Okay? Do you see this little grouping here? There's a reason why this pricing stayed in here. There's a reason why it dropped and stayed in this. And all the traders all over the world right now, sitting at their terminals, whether they be retail or institutional, the big money or the smart money or whatever money is watching this right now. And they're putting stop orders down here, and they're putting buy orders up here, because eventually this is going to go one way or another, and they want to catch it. And it's starting to break down out of this. Now, I don't know where it's going to be at 3 o'clock, but I can tell you that I like this as a short. If I were going to take a short, where would I put my stop? Where would I put my stop? Somebody else want to? You could see the numbers, right? 113.60. Okay? Now you see how it's dropping? This is live. Nobody's excited like I get. I don't get it. You're not excited about this? This is making money. That's what we're all here for, is to make money. We're not here to be right. If you want to be right, do something else. Okay? I'm trying to make money. So I would enter this trade, which you said would be a short. Now what would you do? You would put it up here? Okay. Who else has an idea? Who would go long here? Yeah. Higher here? You would go up there. Okay. A stop, exit of a short. So everybody agrees that this is a good short. It's where you get out is the question. How far would you ride this? Where would you get out of that profitable position, not a losing position? What's your target? What's that? 112.88 on the 200-day? That's a big target. Again, this is a day trading pattern, or look at it as a positioning pattern. It doesn't matter. I could switch it over to daily, and you can see also the same thing. But isn't that interesting? As we're sitting here, the euro has played perfectly from a reversal around 7 o'clock this morning to a move up following through the 40-47s with ease. And they're just carried up mostly on the 10 exponential, pulled into the 15, touched it there, kept way above both these, pulled into right here. So if I was getting long on this position, where would you exit this position? If you got long here, assuming this was going to be a winning trade, where would you exit that trade? Of course, you're going to say right here. Okay? Where would you have exited that trade? You would around 1360, right here. You would have exited that trade? Okay, because why? This one here? Okay. You could have exited there, which would have been a nice trade. You could have taken half the position off there. Or, because you had such a nice trade, you could really have put that below the 40 and 47, or somewhere in there, which would have been this congestion area. Right? What does this look like it's forming? Head and shoulders. A short-term head and shoulders. Now, whether it's going to be or not, I can't tell you that. I can't see the future. I can only look at what's happening and, and let the market tell me what it's doing. Now, what I didn't put up here, and I should have, and I apologize, I didn't put up the pivots for this. And if you saw where the pivots were, it probably would have given you more indication of what's going on. So I apologize, I didn't put it up. But it just gives you a concept. The pivots you can mathematically calculate. You can do it by hand. I know people who don't even have live feeds. Every night they just get the numbers and they take them from that formula, and then they just put their orders in for the next day with their exits and entries based on those numbers. But this is a pretty interesting trade. Now I want to keep you on time, so I only got about 4 minutes. Does anybody have any questions you want to ask me? I'd be happy to answer any questions more about this or other things involving foreign currency trading analysis. Yes? Well, the pivots that I showed you are based on day trading. That's what the map is for a day trader to come in, or the specialist. Anybody? You can take those pivots to a daily, a weekly, or monthly. Yes, you can do that. Those are for the long-term positioners. But again, we're in the business, so we're looking for positioning. But yeah, you can take it any, and not only that, it works in any other vehicle. You could put it on IBM. You could put it on gold. The pivots work in every market. It's like the code of the traders to use those pivots. And if you don't have them, please get them and calculate them out. TradeStation has them built in now. Years ago they didn't. I had to write the easy language for it, but it was built in before. But yeah, it's very powerful stuff. But this stuff, what I'm showing you here, this is not in the textbooks. The pivots are. The pivots, you can Google it. They'll talk about it. What I'm showing you here, I learned this from professional traders who showed me what they were doing. And there was so much commonality between one person and another who didn't even know each other, who came to me to show me what they were doing. I said, wait a minute, there's something going on out here that I don't know about. And that's when I kind of put the numbers together and I said, okay. And I tried different ones. I mean, I'm using 40-47s. 40-48s don't work as well. 40-46s don't work as well. It's 40-47. I don't know why it's 40-47, but it just is. It's like Einstein, you know, he did the relativity theory. He didn't create it, he just wrote down what God created. He didn't make it up. So I didn't create this. I'm just trying to figure out the order of the universe. You know, Fibonacci numbers, Elliott wave theory, whatever you want to use. This is something that I think, oh, look at that, you're making money on this trade. This is just something that I want to point out to you as to if you're scratching your head one day, why did the market do that? And, you know, if you put this up on your screen, you'll say, oh, now I know why the market did that. Now, if you want, I can flip real quickly over to the daily. Do you want to see a daily? Are you interested in that? No? Yes? No? Okay. Oh, I left my glasses on. Hang on. Let me do it. Not yet. I can tell you where I would put my stop in would be a little lower than where you guys were talking about. My stop would be right above here, right above there. I'll take that. Now look at the slope of those lines. You see how they're moving? The sloping negative. There are a lot of trading algorithms that use the slope of the 40 and 47. If the slope starts to go negative, then they start really entering trades, and that you're seeing some powerful people come in. Let me just squeeze around. Thanks. Okay, so this is going to flip over to a daily. How's that for a trend? This is a daily on the euro. Again, same. I'm using the same exact lines right here. Does that look like the 5-minute did? That's daily. So if you're a position trader, you caught a nice trend. This was the 200, broke through, selling came, and you could have stayed in this trade. Maybe you got stopped out right here, because they know where to gun for stops on the trading desks of the banks. They know these numbers too, so they'll play games. They'll try to hit the stops. Oh, can you just hit that X on there? Thanks. The right-hand corner. Thank you. So here we've got the breakdown, which you could have re-entered this trade. See how it just touched there and still staying right on track. Getting into the 15, that purple is the 15. Then you have a little bit about, look at this. Look at that, right to the line. Right to the line. Couldn't break through. So if your stop is above here, you're still riding this, you're still riding this. Okay, so you got stopped out here. I still think that's a good trade. And then you could have re-entered this trade. And and see how it stopped here? Comes down. And this was today. Today it got up because whatever. I don't care what the news is. I just want to know that there was something. And now it's at the low of the day. Or I'm sorry, it's trading in here. So it's interesting as to what goes on, and it just is a natural sequence that seems to occur, not just in the euro. You can look at all the other currencies with this, and I urge you to kind of look at it and see what it looks like to you. So I don't want to, it's 12:30, I know you guys are hungry. Is there anything else I can help you with, anything else I can talk about? You can reach me, if you need to get a hold of me, you can reach me in my office. If I'm there, I'll talk to you, because I got 6 screens, and I watch all markets all day long. And I watch all these numbers and I play with them and I see what's happening. Okay? Did you have fun? Did you enjoy it? A little more energetic than some of the other stuff? All right, well, thanks for coming. I appreciate it and I hope you have a great rest of the day. Okay.